Hello everyone, welcome to the Ichimoku daily analysis for gold for Thursday, February the 4th, 2010. Well, a very large red body candle today, and we haven't seen a red body as large as this for quite some time. This area back here, where the market sold off from around the 1200 area, was the largest red body day, and perhaps that scenario that developed after that large sell-off with the large red body candle may develop following today's type of candle. There is strong potential for that to happen. The market has closed down towards the low, and that's telling us that the bears are in control and they've shown very strong commitment. They did lose a little commitment as the market tried to trade down below that support area at 1066. The sellers are certainly very keen. They've closed a long way below the previous close, so there's a lot of keenness from the sellers, and they're showing strong commitment. And the range of this candle, the distance between the open and the close, shows that the sellers were also very eager. Now we also have a continuation of the trend in the second time frame. We have a series of lower peaks and lower troughs, so that's fairly significant for this market. And the market is trading down below the cloud or Kumo, so the market has an overall negative bias. We need to bear that in mind. The market is now trading down below the Tenkan-sen and Kijun-sen, which means that in those in the fast and medium-term time frames, the market is also negative. It's also bearish. So the bears are in the ascendancy with this market at the moment. Looking at the Chiku span, which is this line here, that's simply the today's closing price projected backwards 26 periods, and we compare that to the candle of 26 periods ago, and it's below that candle now, and that has actually moved down below again, so we should expect more bearishness. So a lot of bearish factors in this market at the moment. Now if the market does continue to sell off, there's support down around this 1029 level. But we identified this level here between 1080 and 1066 as an area of potential support for this market, and the market has tested that level and found some sort of support as it traded down outside of there. The market has just closed just below that 1066 level, so that could be fairly significant for the market. Quite often with these types of candles, we may not see a totally bearish day following this type of candle the next day. So we do need to be very careful of taking any positions based on this. You'd like to see a substantially bearish close below here for the market to continue trending down. But overall, the trend is down in the second and third time frame, so that should influence our thinking in this market. If the market does rally from this area of support, then there is potential for the market to find initial resistance at the Tenkan-sen, which is at 1092, and we know when the market has some solid downside momentum that will tend to act as the first area of resistance for the market. So we need to watch the short-term dynamics if the market does trade up to there, and then also the Kijun-sen, which is at 1111, so there is potential for resistance there. If the market does trade up above that area, then there is potential resistance at the cloud or the Kumo, and a very small cloud. And if the market does rally there through there and have a substantially bullish close up above there, there is potential for the market to become bullish again. But that's rather unlikely within the next week or so, I'd say. More important probably is how the market will react to this area of support where the market is held up, so that's quite important. As I've said before, there is potential for the market to continue selling off down to the 1029 area, so the low of the current candle becomes very important for the market over the next few days.